The Infraday is designed as a forum for institutional investors to discuss with sponsors, regulators and public authorities about the major trends and evolution in the infrastructure debt market. In 2012, the first edition was part of a global initiative to launch an infrastructure platform. This platform is now operational with more than 4.5 billion euros committed amounts from investors, and by the end of the year, 1.4 billion euros invested in 20 transactions. Beyond these successes in Europe, we are developing the platform in multi-currencies. When we created this event in 2012, the involvement of institutional investors in the infrastructure debt market was nascent and mainly a European trend. Since then, this has evolved. The market is pretty much established in Europe and is becoming a global one. As a matter of illustration, we've advised and closed a transaction earlier this year in Peru, where we brought in an Asian investors under a fixed-rate loan format. In different regions of the world, we see more and more sponsors approaching the market with hybrid structures, which include the classic bank tranche, but also now an institutional tranche. This creates opportunities for both investors and sponsors, and as a bank, we structure transactions that would fit for both. This year, the initiative from the European Union to stimulate European growth by fostering infrastructure investment was at the heart of the discussion with a panel on the Juncker Plan. Beyond the pipeline of transactions, the recommendation from EIOPA to create a dedicated treatment for infrastructure asset class was also discussed in details. The chair with EDEC Risk Institute has contributed a lot to this positive outcome, which will foster reallocation of funds from investors. The afternoon was dedicated to the energy sector and the macro changes which are affecting this sector. Indeed, it is heavily impacted by geopolitical and economic forces which make the investment decision more complex, but which also create opportunities. Infrastructure debt financing requires to take a long-term view on regulation and environment, and climate change is definitely part of it. The most obvious impact is a change in the energy mix towards a low-carbon energy. Over the period 2015-2030, renewables should represent 54% of the new power generation capacities worldwide. Natixis and the group BPCE is an active player in the renewable sectors, and the bank has established itself as a key player in the offshore wind market in Europe that has been discussed in the afternoon. The other topic for consideration is the assessment of the environmental impact of projects. We've announced with Global Infrastructure Basel the launch of SURE, a standard which will certify its environmental impact. This will help investors identify sustainable and resilient infrastructure investment opportunities.